Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon and welcome to GrainTV. It's July 8th, 2013. I'm Logan Burgess. To my right here is Brock Shimano. Brock, let's jump into fire tip. See how the grain's traded here on a Monday, and as you can see, found some strength here to start the week. Old crop corn up 7.5 cents. New crop picking up 9.25. Old crop beans up 24. New crop up 24 as well. Chicago wheat relatively more quiet there, up just 3 cents. Kansas City wheat picking up 3.25. Seems like today's action, particularly for those new crop contracts, got helped out by some large export sales. We saw a huge sale of wheat, 840,000 metric tons to China for the 2013-14 crop year. We saw 135,000 metric tons of soybeans sold to unknown destinations, 120,000 metric tons of U.S. corn sold to Mexico, and 120,000 tons of soybeans sold to China. So a lot of action on the export sales front here this morning. You know, I think in recent days here we have seen a stronger dollar index. The dollar was weaker a bit here today, so I think that wasn't hurting anything there as well. That really got the action started today. We saw strength really carry throughout the day here into the close. Following the close, though, we did get the crop progress and condition report. Brock, can you kind of break down that report? I know certainly moving forward here, that's really going to dictate price action.
You know, I think analysts are really starting to focus in on the good to excellent ratings for corn and soybeans. They're estimating it to come out as 68% good to excellent for both corn and soybeans. Corn was reported as that number, 68%, but soybeans was left unchanged at 67%. So not a big, mover there. The area I kind of do want to focus on here today is on the silking progress. If we take a look at this chart here, you can see the purple line is our progress this year. We're only 6% silk according to the USDA this afternoon. That's far below where we were last year. At this time we were 46% in the silking phase last year, and 20% is the 5-year average. So we're well behind both the 5-year average and where we were last year. Right. But the reason why I want to point this out is that this is the time frame last year when we really started to see substantial reductions in the good to excellent ratings. Last year at this time we were about 40% rated good to excellent on the corn crop. We were in the midst of that terrible drought, a lot of heat during that time period as well. And this year we're really not seeing that shape up. We have relatively good conditions moving forward. And the good to excellent ratings at 68%, so well above where we were last year. And I think this is going to really put a little bit of a bearish tone in the market as we move forward, especially on that new crop contract. Just hitting on a couple other crops here. Soybeans conditions, like I said, 67% good to excellent. 40% is where we were last year this time. Winter wheat was 57% harvested, slightly below normal. Spring wheat was 45% headed. That's a little bit below normal as well. But the conditions for spring wheat is still very good at 72% good.
Yeah, certainly. So we're seeing some pretty good to excellent ratings in general across the grains here. Coming down the pipe, though, this week on Thursday, we are going to be getting the July WASDE numbers. Certainly, a lot of people are going to be taking a look at yield projected by the USDA in that report. Certainly, the market in general got a bearish surprise on June 28th, and this is the first report since then where the USDA is going to report on planted acreage and yield. Now, planted acreage was reported in June 28th, weigh in on the market. We're going to have to see how the USDA reports on the new crop yield here in Thursday's numbers. Let's just quickly take a look here and see what the trade's expecting there on those new crop numbers here. As you can see, the market's expecting in general for a slight revision from the June WASDE numbers for corn, soybeans, and wheat. Certainly, I think right now the trade's looking for a little bit of a revision in ending stocks for this new crop here. But I think in light of the planted acreage numbers and the conditions that we've seen here recently, I don't know if the USDA is going to be as willing to budge from their current acreage and yield numbers as what some analysts are thinking. I guess in my mind we could see a number a little bit higher than what the average trade here guess is looking for. Brock, are you in agreement with that?
Yeah, I would agree with you on that. Leaving their acreage, around the analyst estimates or even above what the analysts were expecting. We've seen relatively good growing conditions, 68% of the crop's good to excellent. We are a little bit behind on where we should be on the developmental stages, but at this point I don't think it's anything to be concerned about until we get towards the early part of the fall where we have to worry about frost and freeze threats.
Right, certainly. So here in general is what the trade's looking for the new crop. We are going to be getting old crop numbers on that day as well. Let's take a look at this slide. Certainly not a lot of focus on that old crop out of this report. Certainly some focus, but not to the degree, I guess, that the new crop's going to be looked at. As you can see here, expectations are for slight decreases for corn and soybean ending stocks. As we know, the marketing year for wheat has ended, so that's going to be rolled into 13-14. But as you can see here, not a lot of big changes there expected. Kind of a continuing theme, though, is how tight ending stocks are for soybeans right now. As you can see here in June, the USDA projected about 125 million bushels in ending stocks. That's only about 4% of total usage. So if we see a big deviation from that 125 number out of Thursday's number, it certainly could lead to a volatile trade in old crop soybeans, and volatility has kind of been the name of the game in that July and September contract here over the last couple of weeks. So we'll keep you posted on expectations for that report as we move through Friday, but that's in general what the trade's looking for. You know, Brock, I think that kind of wraps up what we saw here in the grain market for a Monday. Thanks a lot for joining us. We'll see you guys back here tomorrow.